How are you, folks? Enzo DiCostanzo, clinical professor, economics and finance at St. Peter's in Jersey City. And today we're going to be working on our first sort of, well, we had like an introductory lecture video that was sent to you last weekend. And now we're going to have, we're going to we're going to memorialize on video, our class work is what we're going to do right now. Okay. So let's do that. Okay, so we started in class. We talked about the IRS article and funding for the IRS and things. And actually, I'm going to get to that video in this. I'm going to get to that video in this lecture. But also, what we're going to do. The first topic I want to look at. Actually, I wrote out the topics here. Filing status, what a taxpayer is. The initial Wall Street Journal article, we have about 6 so far. We might have a couple more, but I have about 6 Wall Street Journal articles, and the filing status. And now I have this. So again, in class for the single taxpayer, we're going to hit this maybe every video for a little while. So we just repeat it a couple times. I have some graphs I want to work on with you guys, audit rates and enforcement personnel and things of that nature. So we're going to be hitting a lot of that. So like I said, I have an Excel. See, you guys have like the student sheets, and we're gonna, I'm gonna keep updating that with sort of new skeletons or new outlines for you to model. But you've got to fill it in. I'm not gonna just send you a filled in. I mean, that's ridiculous, right? You've got to fill it in yourself. Okay, so make sure you're doing that, all the time. Okay, and that's I'll put that on. I'll post that to Blackboard. But that's what you should be doing. And also in class, I asked somebody how much time they spend on the course, and someone said for a 3-hour course I spend about an hour and a half, and I think the person was being gracious with that. You really got to spend. My course needs about 10 hours a week outside of class 10 hours a week. That's, folks, that's college. That's college. So you should spend some time doing that, and especially with the world the way it is and what's going on, you want to be, as highly capable as you can be. And see, I can't sit there and say, be a tax guy or be an economist or, do microanalysis of companies. I can't say, well, this is going to be perfect for you. Do the statistics or whatever, or the legal stuff or the contracts, but it's what you like to do. So I'm giving you, you're seeing 4 or 5 different things from me that you could do. We're going to write a brief. We're going to write a legal brief on the U.S. Supreme Court case that said the sort of outlined not the tax case, but one of the landmark cases, I think from the 1800s. It was the one company had to recognize gains from investments and stocks and things of that nature and had to pay taxes on it, something like that. Anyway, we're going to do a brief. The CUNY outline. We have the outline from CUNY, so we'll look at that. So anyhow, so let's start with filing status, and also just to keep everyone this in mind for everyone. This is the all my 4 courses have similar Blackboard sites, but this is the Blackboard site. So I'm gonna jam in the link here. Right, like in between these dates, kind of a situation, and then we'll have another announcement with October's videos and November's videos and things like that. So we're also going to discuss, again, you go to syllabus and schedule, you go to regulation. I already opened them up, the 501 publication, the tax instructions. We're notes and problems right now. So again, if you just go to now, again, here's the difference. My version, I have everything outlined, and your version doesn't have that, and that's on purpose. Okay, I want you to do the highlighting and the outlining, and I want you to be able to do all that stuff. So, okay, and actually looking at the 501, it's the dependent standard deductions and filing information for 2021. It's about, I could do a video on these 30 pages. This is about 30 pages, sort of as is here. Right? I mean, just looking at that. 1 second. One second, folks. Sorry about that. Okay, back. Yeah, this talks about dependents, filing information, things of that. And like I said, I could do a video on this whole story. And actually, the nice thing about this is if you click on these this is a PDF, but it works very well. If you click on these page numbers, it goes to filing status. And actually, here's filing status right there. This is who should file over here. And if you look at this, it gives a whole sort of set of reasons to file. It says even if you don't have to file, you should file a tax return if you can get money back. For example, you should file one if one of the following applies. You got an income tax withheld from your pay, you made estimated tax payments for the year, or had any of your overpayments last year applied to this year's estimated taxes, you qualify for the earned income tax credit, you qualify for the refundable child tax credit or additional child tax credit, you qualify for the refundable American Opportunity Credit, and on and on and on. All the conditions that you'd want to look at here. And also there's something else. There's another algorithm here. It says you must file a return if any of the conditions apply below. You owe specialized taxes on Schedule 2, Form 1040, including any of the following: alternative minimum tax, additional tax on qualified plan, including individual retirement arrangements or other tax favored accounts, Social Security and Medicare on tips you didn't report to your employer, or on wages you received from an employer who didn't withhold these taxes, and on and household employment taxes, uncollected Social Security. Oops, I apologize. You had net earnings from self-employment of 400. You had wages of $108.20 or more from a church or qualified church-controlled organization, and on and on. So again, it's it's that type of thing that you're reading. Okay, it's that type of thing that you're going through. So just keep that in mind. That it's very detailed. That's what it is. Filing status. All right, you must determine your filing status before you can determine whether you must file a tax return. What your standard deduction is, what your taxes are. Use your filing status to determine whether you're eligible to claim certain or other deductions and credits. There's 5 statuses: single, married, filed jointly, married, filed separately, head of household, and then qualifying widower or widower. Now, I don't think the last one applies to any of us, not to me. I've never been married, so that's why I don't have that situation. I have to ask my tax person about the head of household question. I like that. I've been filing single for obviously my whole life, but I got to ask about that. And it says if more than one filing status applies, choose one that'll give you the lowest tax. Okay, so you have to look at the marital status situation, and there's a whole bunch of legal definitions here. But this is real. And again, for people who like to read legalese, folks, and I'll tell you, I don't do tax for a living, but I decided just to teach it this semester because this is coming up in our work. But this is a nice career, okay? Like the legal function, the tax function, the accounting function, and then sort of all the breakouts from a lot of those other pieces there. But it's a nice. The reason I keep going back to this, I think 10 minutes. 10 minutes in it, it's going to ask you if you want to keep recording it. I don't want to get cut short. One time I had not that something had happened, but something where it cut off on us or something like that after 10 minutes or so. So I just want to, because I started at 8:07, so in about a minute, I just want to make sure we're checking on that. Marital status, divorced person, single, married, filing joint. Here, let's look at the single one. It says your filing status single if you're considered unmarried, you don't qualify for another filing status. Determine your marital status, see the marital status. So yeah, the whole marital status thing, you sort of go through a little bit of an algorithm. Are you unmarried person? Are you divorced and remarried, annulled marriages, head of household or qualifying widower, or married persons considered married? Spouse died during the year, married person living apart. Okay, but it's a lot of these types of things. And like I said, you just sort of, now look, if this is what you do for a living, you're going to give this a very good, you're going to give this a very good look as you're doing things, right? You're going to give this a very good look as you're doing things. That's for certain. Married filing jointly, and like I said, I could spend a long time going through all of this. It goes through the dependents, and it goes through the tax credits, but it's 31 pages. Okay, and then there's a test for a resident test, a citizen test, where you ask a bunch of questions, and based on how you answer the questions. But I'll tell you, it's one hell of an accomplishment for a bureaucracy to sort of get through all of this. And look, there's some people who are just a little more, see, here we go. Stay in the call right there. Yes. Okay, that's what I was waiting for. So 10 minutes in. So there we go. We caught it. But so there's an audible signal. So I got to keep but I know 10 minutes in, it's gonna check on us. What's going on? Exceptions, dependent taxpayer test, what a qualifying child is, support test to be a qualifying child of more than one person, joint return test, on and on and on. There's a lot of it. Different examples of unmarried parents claiming a child, and so many different examples here. Qualifying relative. And then again, as you click on these, what the gross income test is, as you start clicking on them, you can start moving around this. But like I said, it's a nice career. And see here, something like this. Keeping track of your medical expenses, and if there's other deductible expenses, things of that nature. So this one, they're talking about food and clothing. I don't know what this is. That's, I guess, if you're supporting someone, kind of a situation. So, and there's a lot of accounting terms, and it's very legally written. The courts work like this, where there's a test that says, hey, did you steal a car? Did somebody see you steal the car? Those kinds of things. Social Security number dependents, what a standard deduction is. Most taxpayers have a choice of either taking a standard deduction or itemizing their deductions. If you have a choice, you can use the method that gives you the lowest tax. Okay, and then it goes through what a standard deduction is. Okay, so just a lot of details with this, and it's good. And the CPA exam is about a quarter of this, and you can see by the time you get into the 20s, it starts giving you worksheets and how to get tax help, and so I'll tell you I haven't done this, and now there's YouTube videos here. At some time in your lives, January or whatever, pick some starting point in the year. Read this all 30 pages, even in the course. Read a page or two a day, and just see what this looks like, and spend a little bit of time on this. Okay, like I said, but I'm going to give you sort of an abbreviated version of this. And actually, there's 30 pages here, but the last 2 pages are appendix, and then there's some worksheets in here and websites. So it's really about it stops at about 24. There's a standard deduction table. It says who should itemize. If your total deductions are more than the standard deduction amount, you should also itemize if you don't qualify for the standard deduction, as discussed earlier. This is where audits come in. When you don't take the standard deduction and you start to itemize yourself, then what expenses can you itemize? Do you have records to back everything up? That's really where, in terms of an investigation. Now, the woman who does my taxes worked for the IRS at one time, and you get into trouble where you're declaring amounts and you have no documentation, or you're declaring income and you have no documentation. In my case, I have to make sure that I get an agreement or a contract or something that says what's going on. So, but yeah, so it says when to itemize, paid interest and taxes on your home, large contribution to qualified charity, had large uninsured casualty or theft losses. Okay. I think we deduct the property taxes, because she's always asking me for the tax sheet, my property tax sheet. But like you said, as you go through this, there's just a lot of. Now we're going to talk about all the pieces to this, but there's a lot of pieces to this here. Like I said, I'm not going to go line by line through this, but there's examples in here of what they're talking about in terms of different categories and things of that nature. So the gross income test and what that is, it should be less than 4,300. All income in the form of money, property, services that's not exempt from tax. So, okay. And then, like I said, we have some examples already of this. I'm not too big on the whole disabled thing. Membership of household or relationship test, foster children, son or daughter of your brother or sister, and on and on and on. All the details here are here. But anyhow, So this is here. This is posted to Blackboard, so you guys should get onto Blackboard, and it's right there. Where is it? It's 501. It's the first one. Yeah, there it is. Okay, so the PDF is posted there. Okay, so you could download that. And now, like I said, you saw me clicking on all the different links and things of that nature. I don't think you can. Yeah, or you can do. Okay, you can do it. Is it? But still, you should still download this stuff to your hard drive. And you should understand that this is on the server. This is not on your hard drive. Okay, you should understand those things. Okay, that's important. But like I said, spend a little bit of time on this. It's useful to you. Okay. So anyhow, getting back to what we were going to be talking about, filing status. It's a category that defines a type of tax return from a form a taxpayer must use when filing their taxes. It's closely tied to marital status. It's filing status is important because the individual tax bracket and therefore the amount they must pay is determined by marital status, the number of children, occupation, several other factors. You have to file the status honestly, or it can be considered fraudulent, and penalties can be assessed. Now, I was reading through some other press releases or other Wall Street Journal articles that talked about how much tax isn't collected, and then really the very complicated legal situations, the sophisticated, I don't want to say opposition, but the person you're trying to collect taxes from, if it's someone who can afford lawyers and accountants and all these other types of folks. There was an article, one of the Wall Street Journal articles was going through, you need expert witnesses, and you need specific types of lawyers and a records person, and this, it's still a government agency. Deal with your local, I hate to say it, but deal with your local police department or your local municipal government, and you'll see how, I hate to say it, but how the people there barely know much of anything and are certainly not going to help be of any use whatsoever in any manner. So that, again, a lifelong Essex County resident, I've done my battles with the local municipalities, and it's not a pretty picture. They don't know that much, but they're in charge. That's the scary thing of it. And with the IRS now, maybe it's a little, with the municipalities, it tends to get personal, but with the IRS, it's most likely not going to be. For the federal agency, it's not going to be so personal in a sense, but still, you'll be dealing with people who, if someone's a really good lawyer, are they going to take a government job, or are they going to go make $250,000 a year plus a bonus somewhere else? That's that particular situation. So anyway, it's with anything, it's important to be honest about it and not to try to cut corners. You may get away with something 100 times, but the one time that there's some kind of problem, it's not gonna turn out well. And especially if you're caught saying something that can't be backed up or can't be proved, if you're saying something that's not supported by some kind of documentation, I wouldn't want to be in that situation at all, or hiding income, and you don't want to make yourself an easy target for people, because these folks do get paid on the cases they win and the number of enforcements they complete and things. Don't think for a minute that there's not a financial compensation or an incentive to it's not like law enforcement where I really don't think there's a quota system, or at least I don't think so, but I could be wrong, but I doubt that there is. But with federal agencies, there could be some motivation to get things done. But again, the complexity, if you engage in some complex case versus, maybe a person who doesn't have the resources or the personal sophistication to hire, a couple tax attorneys and to know what, and it's multi-million dollar cases. A lot of the IRS stuff comes down, a lot of the IRS disputes come down to valuation. The whole Trump thing is that too. They're fighting that. And then if there's a court precedent somewhere and that's on your side, and if you have a lawyer that's helping you with this, they'll say, hey, if this does go to court, we have this case ready to go. We've briefed it. We're experts at it's this specific court case. And, they might even know better than the judge does, and that certainly I've seen that happen too sometimes. So anyhow, federal income tax purposes, a taxpayer falls into 5 categories, and they're all here: single, married, jointly married, filing separately, head of household, qualifying widower with dependent children. And then we have a few sentences per each one of these topics, and that's pretty much it. That's the first bit of lecture for this. Now I have whole entire lectures on single filer and married person filing jointly or surviving spouse or whatever it might be, but we're just going to go through these very quickly. So a single filer, unmarried taxpayer, a divorced individual, a registered domestic partner, are legally separated according to state law as of the last day of the tax year. So whatever, December 31st, whatever, 2021, the year we just had. The head of household or a person who is widowed does not fall under the single category for tax purposes. Single filers have lower income limits for most exemptions. So, and it's so that might make it the least appealing category to be in. A married person filing jointly or surviving spouse, and an individual that is married by the end of the tax year can file tax returns jointly with their spouse. While filing under marriage jointly status, couples can record their respective incomes, exemptions, deductions on the same tax return. A joint tax return often provides a bigger tax refund or lower tax liability. Okay, that's pretty self-explanatory. Married filing jointly is best if only one spouse has a significant income. If both spouses work and the income and itemized deductions are large and very unequal, it may be more advantageous to file separately. So again, I heard Trump's tax return was 400 something pages. Or I don't know. I haven't heard many that were that big, but when you're a sophisticated guy, I guess that's what you do. So yeah. So it could get to that low. And what you would do is, and again, and this is a little advice that I could pass on to you guys. The woman who works on my tax returns, who I think I mentioned, who has the St. Peter's connection, and I've worked with her for 20 years. I've been at St. Peter's about 10 years. So she predates me coming to St. Peter's, but her father worked at St. Peter's, and one of the buildings are named after her father. She told me, she says, file as early as possible. Don't wait till the end, because those are usually the ones that get audited, kind of a situation. So good habits of getting your assignments in on time, getting your taxes in on time, not waiting, that could alleviate a headache of having to deal with. Now, an initial audit could be letters, and it's not going to be this. Fox News is dramatizing the whole enforcement idea that's out there, making it very dramatic. Again, so you tune in, and then I don't know, and perhaps see Donald Trump getting led away in handcuffs or something to that effect, right? That could be what people might be waiting for, that kind of a thing. So, but yeah, so what you would do is, you'd want to go through the different versions. Now, again, obviously, if you're not a widower, you're not going to, there's no chance of you filing that. So don't worry about filling that out, right? That kind of a thing. So head of household, single or in married taxpayer, who pays? Now, I pay at least 50% of a supporting, I pay all the household expenses and lives with a qualifying family member. My mom is with us, so whom they provide support for more than half the year. I gotta ask my tax preparer if I could have qualified as this. I didn't again at the time. I didn't stick my head into this area until now. So this means the taxpayer must have paid more than half the total household bills, including rent, mortgage, utility bills, insurance, property taxes. So see here, this whole list of things in your life, and this is some good. I hope this is some good advice for you guys. You need to have a good handle on these bills. What do you need to live, right? Rent or mortgage or whatever it might be, property taxes, household expenses, insurance, groceries, if you have to have your car fixed, that kind of thing, what the phone bill is, and the internet connection for your home, and all. And again, you should have high speed connection, and not just everything shouldn't just be wireless. You should. I'm working from a plugged in environment here. Everything's Ethernet. You guys probably don't remember what an Ethernet is, but Ethernet was the big advance in the 90s, that we had Ethernet at Rutgers, Ethernet connections and things. That was very fast compared to the phone cable. Went from a telephone connection to an Ethernet connection. The plug was bigger, the wire was thicker, and we said, "Oh, this must be must be much better," kind of a thing. But you want to know what these numbers are. And some examples of qualifying family members include a demented child, a grandchild, a sibling, a grandparent. So it doesn't say parent that you can claim as an exemption. So yeah, I gotta ask. It doesn't say. I know. I'm looking here. It says grandparent. Qualifying family include a dependent child. So maybe that's why I've never filed it as this. So anyway, head of household benefits from a lower tax rate. Okay, and then obviously the widower thing. I don't think it applies to any of us, although it may. During the year in which the spouse dies, the surviving spouse can typically use joint filing status for the 2 tax years following the year. So yeah, now again, see how it's written. So okay. During the year the spouse dies, the surviving spouse can typically use the joint filing status. Okay. Now, for the 2 years after the spouse is dead, the surviving spouse can file as a qualifying surviving spouse, While the surviving spouse cannot continue to claim an exemption for the deceased spouse, they may claim the same deduction for a married couple. So it's a little bit higher of a deduction. So there's some benefit to that. Not that it's a benefit that your husband or wife passes away, but there is some sort of the IRS, I guess, to if you're most people and the world we're living now, everyone's got to work in the family. If you just drive around Essex County, you drive around Union County or whatever it might be, Elizabeth, you'll see houses where there's a lot of people, a lot of cars in the driveways. That's a lot of people working, and everyone's helping to pay the bills and that kind of that's the economics of the urban areas are moving to that. And Victor Davis Hanson out in California will be happy to talk to you about California, and he called it the Mexification, however he defines it. But he's a conservative thinker. He's out at Stanford. He was he worked in the Cal State system for 20 years or something like that, quite a while, and built a classics program at one of the California state system, their version of Rutgers out in California, which is a much bigger system. The Texas system, the Illinois system, the Texas, California, those are the big state systems. And he built a classics program out there and educated many Mexican American immigrant children, and I think he said something where their rate of students who went on to master's degree programs or PhD was higher than some of the prep schools that are designed for that. So he's very proud of that. So anyhow, so that was publication 501. Okay, so we went through those, the head of household and married person. So you have, and this is all, if you look at your version of this, it's going to be the first couple of filing. So here, what you're going to do is I'll put the topics up here. You want to look for filing status in the notes. You want to look for taxpayer. Just do a search, right? How do you do a search? So just highlight filing status, and then you see click filing status, and you should look for the first one, right? And that's it. So instead of you clicking away over 200, my notes are up to about 200 pages, and they're going to be going. And again, I'm making the notes as we're going. I have 200 pages done already, but we're making the notes as we go along, and I always think that keeps me with you. We're doing this together. We're doing this together. So I'm always happy to do that. What's a taxpayer? That's next. What's a taxpayer? And again, it's similar stuff. It talks about the 1040, and so the first 3 or 4 pages of the notes what we're going to hit today. It's an individual or business that's obligated to pay taxes to a federal, state, or local government. Tax from both individuals and businesses is a primary source of revenue for the government. In the United States, individual taxpayers are usually required to file and pay both federal and state tax returns annually. Business must also file annual returns, but usually plan for and pay regular estimated taxes. Now, I'm starting to do that, to pay quarterly state taxes too. Okay, outside of my St. Peter's employment. So a taxpayer may be an individual business that's obligated to pay taxes, federal, state, or local government. Individual and business taxes are primary sources of revenue for governments. And individuals and businesses have different annual income tax obligations. The U.S. tax code is legislated and enforced by federal, state, and local governments. The Internal Revenue Service is the primary governing agency overseeing the implemented tax code for both individuals and businesses. State and local revenue agencies are responsible for implementing and enforcing the localized taxes, such as sales tax and property taxes. Both individuals and businesses must be aware of their tax obligations, since not paying necessary taxes can result in penalties and further legal actions. And again, I've said this in class, you really want to stay away from attracting, buying, involving yourself in legal action you could otherwise avoid. It's a big time drain. It's a big aggravation. It's forget about the money. And look at Trump, how Trump is going bananas. It's you're spending time on nonsense, on nonsense. And we all want to avoid spending time on nonsense. And now this is just a repeat of what we just spoke about. There's individual taxpayers. There's filing thresholds. There's what a single taxpayer is. There's about 7 categories here. It says individual taxpayers may choose single, head of household, married, filing jointly, married, filing separately, or widower as the filing status for their annual. So this is just sort of a little bit of a repeat, but that's never been. Okay, that's never been. So what are we looking at? We're looking at individuals, and there's a certain threshold governing the obligation to pay annual individual income taxes to the IRS and state revenue departments. Obviously, in New Jersey, you pay it down to Trenton. In New York, I think it's to Albany. So federal threshold is based on an individual's filing status. Each state will have its own threshold. Individual taxpayers should check the federal and state thresholds to determine their filing obligations for a given year. The IRS publication 501, which we just talked about. 501 is right there. There it is. There's 501 for you. All right, we just talked about this. Okay, 501. Dependent standard deductions filing information provides federal tax guidelines for now. Federal, that's not New Jersey. It's federal tax guidelines for individuals. An individual's filing status will influence how much tax is withheld from payroll. It's a primary factor influencing annual tax obligations for a given year. Therefore, it's important for an individual taxpayer to maintain the same filing status with their employer they plan to use for their annual tax filings. Improperly notating the tax filing status on the employee withholding forms like the W form can result in withholding too much or too little, which will be reconciled. I've seemed to have to reconcile every year for some reason. I don't know why, but I seem to. So a marriage, dependents with children are two things that will characterize a taxpayer status. If married, individual can choose to file separately, and taxpayers also have the option to file as a widower if their spouse has died. Individuals who are not obligated to file tax returns will still encounter taxes in their everyday life. Other than income taxes, there's sales taxes, there's property taxes, and I go every month and I write a check to the township, a grudgingly check to the township, right, of Belleville or whatever Newark or whatever it might be. They're based on location. Okay, not for the threshold. Not all individuals are obligated to file federal tax returns and state tax returns. My mom is in it. We've legally categorized my mom where I don't think she's paid taxes for quite a while. But yeah, that's fine because we have her lawfully categorized where she doesn't have to do that. The federal threshold for filing a tax return is detailed by filing status below. The states follow similar status standards but can have different thresholds. So some people might not need to file a tax return at all. Some people may benefit from filing a return even if it's below the threshold that can be paid a refund with the applicable deductions and credits. You need a social security number to file a tax return, and you get that from the Social Security Administration. And this serves as a taxpayer identification number, so it's important to obtain one if you plan to have tax obligations. In general, there's no age level associated with paying federal taxes. Any individual who has a gross income at or above the threshold levels should file a return. And again, there's some references to the publication. A single taxpayer is if they're unmarried, divorced, registered domestic partner, legally separated according to state law. As of the last day of the tax year, so December 31st, 2021, head of household or a person who's widowed does not fall into the single category for tax purposes. Single filers have low income thresholds for tax filing obligations. And then we're repeating ourselves on head of household. It's a single unmarried taxpayer who pays at least 50% of the cost of supporting his or her household and lives with a qualifying family member for whom they provide support for more than half the year. This means that the taxpayer must have paid more than half the total household bills, rent, mortgage, utility bills, insurance, property taxes, groceries, other common household expenses. Some examples of qualifying family members include dependent child, grandchild, brother, sister, It doesn't say parent. I noticed it doesn't say parent in there. So, but again, so looking through all of this, see the way this is written, you have to use a lot of, even though there's maybe not so many numbers in here, but you have to use a lot of logic when you read this stuff. Okay, that's an important part of what you're doing, what you're dealing with here. You got to be very, very logical, very, very specific, detail-oriented people. Married filing jointly. The couple records their incomes and deductions on the same return, and you could have a bigger tax refund, and a lower tax liability. And again, the general rule is it's best if one spouse has a big income and if both spouses work the income and itemized deductions are large but unequal, and it could be more advantageous to file. And again, I think we saw that in the previous set of notes. So yeah, so I put these notes together, and like I said, I know this is a little bit of a repeat of what we just spoke about, but that's never bad. All right, so it says the filing joint is if somebody has somebody's making $1 million a year and then somebody's making $25,000 a year, it's best to file jointly. But again, you have to do the math on that. You try both versions of what you can deduct and tax credits and separate together, and you see what gives you the better tax bill and the better refund. So the filing separately but married is a tax act used by married taxpayers that choose to record their respective incomes, deductions, and credits on separate tax returns. Married filing separately may be appealing to couples who find that combining their incomes pushes them to a higher tax bracket than either of them would be if they filed separately. I'll say that it's married filing separately may be appealing to couples who find their combined income pushes them into a higher tax rate. Okay, so yeah, so if they do it together, they're in a higher tax bracket, and then it's a lower one if they do it separately. Okay, so it's a potential tax advantage to file when one spouse has medical expenses, miscellaneous itemized deductions. But again, documentation. The widower categories, we've discussed this before. The surviving spouse situation, federal qualifying widow or widower tax is available for 2 years for widows and widows with dependents after their spouse's death. Okay, and it says what you can file as. And the next piece of this, now this is where we sort of expand a bit. It says individual taxpayers must file annual federal tax returns subject to the following tax rates and deductions for 2020 and 2021. Yeah, these brackets, we filled these out in class, these brackets. Okay, so what that is this. This stuff, right? We did this. So I'll do the 2021 one, and actually we'll do it. We can even take a breath and just do it now. But yeah, so we're gonna look to fill that in, and then it talks about the 1040, self-employed, partnerships, small entities, taxes for corporations. So we have a couple pieces to this, and yeah, and we're gonna pick this up at the single filer point next. But a 1040 makes a tax return makes filing easier for individual taxpayers with simple returns. It covers half a page. It can be referred to as a postcard filing. And actually, folks, what you should do, assignment this, assignment that. You take a read through this, through the 501. Take a read through the 2021, the instructions. Where are the instructions? Where's the tax instructions? Right there. It's about 28 pages of tax. Take a read through these tax instructions. Now, the nice thing about the instructions is it references the tax code. I wish that my questions had all done that. So after looking at this, the next time through, I'm not going to do it now because there's really not a hell of a lot of time to do it. But to start relating it to the actual legislation, that might be something. That's a project for me for maybe next summer or something like that. But you can see foreign earned income exclusion, tax responsibilities of expatriation. There's a lot of detail, a lot of failure to file partnership returns, and on and on and on. So this is married individuals, heads of household. Single. Here it is. And this is for the 2021 year. So we're going to go through. We did this in class. Okay, we're going to go through this in a second. We're going to go through and we'll put this in the Excel. But let's finish this out. It says self-employed. It says it covers half page, postcard page. However, while the front page is simplified, many have to attach relevant forms or schedules depending on their individual situations. So, self-employed business taxes for individuals, sole proprietorships. Remember that from accounting? You need to file a Schedule C, and we're going to go through the schedules A, B, and C, and the different forms. We'll go through that. And it says self-employed is 1099. These individuals may qualify for certain business deductions. Okay, taxes for partnerships, limited liability corporations, or with more than one owner. These entities make up a large portion of the small businesses in the United States. Other types of small entities that may need to consider annual income tax filings can include trust estates, qualified joint ventures. Okay. There's a Form 1065 for partnerships with K1 reporting, which passes the taxable income or loss to the individual taxpayer owners. So they pay taxes on the K1 and then file a report using 1040, which then subjects them to individual 1040 tax rates. Tax for corporations are Form 1120. Okay, but those are courses. These four P. That's about 4 other courses. All that. So yeah, now there's some instructions and we're gonna go through a part of that. Okay, but you've got I didn't spend the. We're doing individual for now. If I want to advance, we'll see if we get through the first 140 questions. I have 140 questions for the individual. And we'll see if we can get to the corporation stuff. So 140, I would have to do 10 questions a week, more or less. Just, and we'll see that might be what we do if we do a little bit more, but then we have the other lectures. And so we every class we do 3 problems or something. And we're going to just discuss too. We're going to have a discussion of this stuff. Okay. So there's the first bit of this. And if you don't mind, just as we're talking here, I highlighted some of this stuff too. I'm just going to gray this stuff out, if you don't mind, just to remind me that I did it. So I have to, say, did we talk about this in class? So this is just all grayed out. And we'll go back to it if we need to. Is there a lighter one of this? That's pretty light. So, okay. Yeah, we'll hit it with the single filer next. And the next thing, and we've already talked about this, spoke about this in class. We looked at this. So watch, find. Okay, see how I did it? It went right to what I was looking for. I just typed in under, Control F in Word under find, and it went right to what I was, instead of me, ticking out 159, page downs or whatever it is. So we spoke about this in class, and we're gonna get back to this. We'll end with this. We'll just sort of end with this just very quickly, and just this one particular discussion here. So actually, what we're gonna do, this is what, 159. Just saw something. You know what it is? Instead of having this all highlighted, I don't like the way this looks. So we're gonna do it like this. Well, filing status, taxpayer. We'll do it like that. How's that? Better? And then we can clean this up, and we're not, because we might need to read this at another point in the semester, and it's not so great for the eye to have to read all that, through the gray, So yeah, taxpayer we spoke about, filing status we spoke about. Okay, so we're gonna put this in the YouTube in the prompt there. So go 159. Okay, 80 billion to both. So yeah, we spoke about that in class. But actually, what I want to get to now, if you don't mind, is I just want to fill our. Of course I could copy and paste, but let's do it the right way here. So we're here with this. And let's pick out the instructions. So yeah, these are online. So this is page 6, and we're looking for, actually here. So what page? Yeah, page 6. What is this? This is the tax instructions for 2021. This is for you guys. This is here, right there. There's 2021 tax instructions, page 6. Okay, whatever. Here's page 6, right there. Not heads of household, but yeah, unmarried individuals, that kind of a thing. Okay. Now again, you should have this downloaded to your, to your computer, to your hard drive. Okay. All right. So just a couple pages. I don't mind. Estates and trusts. Heads of household. Oh, yeah, there it is, right there. Okay. So what am I going to do? I could slide that there. See, when you have a big screen, it helps you, right? So now I can just sit here and, so what are we doing? So the first rate is 10%, 12%. I'm reading here, 10%, 12%, 2%, 24, right? 32, 35, 37. Alt H, no film. Okay. Now again, we discussed this in class, and I'll discuss it in the video also. If you just typed in, 10, 12, all that, there's no formatting, right? This is formatted. Percentage, 1 decimal place, centered, blue. And remember the blue and the black? The blue font means it's an entry. The black font means it's a computation. Okay. Now, and I'll tell you, somebody, and it's good, somebody who's taken a couple classes with me mentioned at the end of last class, said, "Hey, professor, how are you, organizing these sort of brackets. Okay, so you're at 0 to 900 and 950, 9,950 alt HHN, right? So you're paying 10% there. So now this is just a little listing here, but I have like a table where I subtract the endpoints and then multiply by the tax rate, and that gives me what I pay in tax for that bracket. So if you're making $250,000 a year, you're here someplace. You're at the 35% tax bracket. You're making 250, but only from 250 minus, so only 41,000 is taxed at 35. It's progressive. It's not okay. You're making 250, so you have a flat tax rate of 35%. It's not like that. Okay, so there you go. Let's do the next. Now you got to. I've done this where I've increased this by 1. I said 9,951 to 40,525 right there. Okay, that for the 12% rate. So it's only this this 30,000, right? It's if 40 minus 10,000, it's that 30,000 is taxed at 12%. Okay, and I move this up by 1 for sort of visuals, but when I make the computation, I don't want to lose all the pennies. It's 9,950 and 1 cent. So I don't want to lose those 99 cents. So the 12% would be 40,525 minus 9,950, not minus 9,951. But I'm just doing this just for sort of so as we move the end point from the last bracket to the starting point of the next bracket, I increase it by 1. That's just me. That's just how I'm doing it. So the next bracket would be 86,375. Okay. This is 86,376, and this is 164,925. And this is for 2022, and we'll do a couple of these instead of just cramming them all in the first video here. We'll do a few of these. This is 164,926 and 209,425. $209, 426, 523, 600. Now this is where someone said, "Hey, what are you doing?" which is fine. I don't mind being questioned. There's no problem. I did it. I had to put over here. Over 523,600 like that. I did it like that, but someone said, "Why don't you put 523,601 and then just put over there?" But we read from left to right. That was my rationale. And you know what? While we're here, and even though we didn't necessarily go through the standard deduction, but we've discussed it. There's a standard deduction table here somewhere. I'm gonna click until I find it. Yeah. Where is it? It's not that. Okay, here it is. Here's your standard deductions. So for single, it's 12,550. All right, 12,550 for single. Okay, and we're going to go through the specifics of itemized deductions. We'll go through all that. We're going to go through all that. Okay, so you had your first little table. So, like I said, you should go home and do this. Okay, you should be working and not just leave it and then you have an assignment to do and then you're rushing. We're going to do some graphs. We're going to do a bunch of things. So you should try to keep up with what we're doing here. Okay, you want to keep up with this. The last thing I want to discuss, and we're coming up on an hour now. We discussed this in class, buying to seek 80 billion to bolster the IRS, and we're going to read some Wall Street Journal articles, and you should also read this. Okay, you should definitely also read this. So, again, let's make sure we cover this in sort of gray, so it reminds us that we went over it. So, Biden plans to propose 80 billion funding boost over 10 years. It's a major expansion of the tax agency that would double the enforcement staffing and gives a government agency, a federal agency, new tools to combat tax dodging by the wealthiest Americans. Well, tax dodging. But again, if you can afford the accountants, if you can afford the tax attorneys, if you can afford the experts and the forestry experts and and this and that. And again, it really comes down to valuations. Now we're going to spend time this course talking about realized gains and realized losses and recognized gains and losses and all those types of things. We're going to get to all that. So, and the idea is over a decade of spending 80 billion, that the government's going to generate another 700 billion or so. Now I know the number for number of years ago was I think like 2011, 12, and 13. I think it was $1 trillion that wasn't collected. So they could probably do a lot more. So we're complaining about this. So what we're going to do here. So for every dollar of funding, we're going to get maybe $9, right? For every dollar we're going to tax dollar we're going to spend, we're going to bring in 9. And the idea is the agency is supposed to cover itself. So we'll see. We'll see if that's what happens. I have some graphs about how many enforcement agents they have, and we're going to make some of those graphs. People familiar with the plan who described it ahead of the official announcement, they said the increase would yield money for Mr. Biden's proposed expansion of social spending programs, which still represent only about 10% of taxes. So this 700 billion is a tenth of what's owed but not collected. I'm sorry, the 700 billion. So that's right. That's about right. That's about 10%, right? So they said a trillion over a couple of years. So yeah, if there's 10 of that, that's 7 trillion or so, right? 10% is that'd be 10 times that. So over a decade. Would provide a steady funding for the IRS after years of flat or declining budgets, forced steep cuts in the number of employees, conducting audits and collecting money. And agency officials have said they need a multi-year commitment from Congress so they can hire and train and staff and ramp up audits with less risk. Lawmakers stopping such initiatives midway. The money would let the IRS increase its enforcement staff by about 15% a year. Now, I'll tell you, I was relatively lucky when I got into teaching. I graduated in June, and I was up at Marymount College in Tarrytown in August, the end of August. I remember it so clearly. It was the end of August. I was nervous and sweating, and the classroom was hot. But it was a beautiful view, though. You had a view of the Hudson River, and the old Tappan Zee Bridge was the bridge before the Mario Cuomo Bridge got put up there. I remember it so clearly. It was a nice old religious Catholic college up in Westchester. And the Jesuits bought it for about 10 years and just couldn't make a go of it for whatever reason. So I know the reason. I'm not going to say what the problem was, but I know what the problem was. Beautiful location, though. Beautiful, beautiful, beautiful. But the Catholic orders dwindled, and there weren't as many people fundraising anymore. And the sisters were involved in administering the college. And they had to pay a lot of people to run the school as opposed to having religious do it. And then it's a job and not a vocation. And a lot of things unwind. And I think where we are, and you've heard me say this in class, I think where we are as a society started a while. This isn't just because of COVID or, some unhappy social thing that happened that everybody's upset about, or it's nothing like that. I think it's just a long glide to where we've been here, where religion stopped being so central, faith stopped being so central. I think we have other things that we sort of idolize that might not be so healthy, and it's just become the values. The values have just gone out the window, and I people are just arguing and fighting just for the sake of the fight. Maybe not even for standing behind what they're believing in, but just because they enjoy the confrontation. That's my humble opinion. But what can you do anyway? But let's get back to this. So anyhow, but yeah, so. How do we get to that? How do we get onto that? Anyway, I forget. So, but it takes time, right? Yeah, it takes time for these guys to be useful. But I was lucky though. When I started teaching, right away, I felt generally pretty good. And I think I was at Rutgers the next year. And by '96, I said to I remember it so clearly. I walked across Warren Street in Newark one night after teaching. In the spring of 1996, I said, I got this. And I don't know, whatever that means, I got this. But I just said to myself, I felt like I knew what I was doing at that. And I even before that, but I walked out, the air was just right. It was the spring. And, I don't know. It was just one of those moments that you remember decades later that something clicked and said, hey, you're doing what you should be doing and you understand it. And so the same thing with these agents. They're not going to be effective. They get hired and not going to be effective the next day, and then fighting these. It takes sophistication. You're enforcing stuff, and people want to get away with things. And again, if you've got somebody with 20 or 30 years in business and you have a young IRS agent who's 27, and he's going after some guy who's 55 and who was an attorney and a tax guy and this and that. I mean, that's a real David and Goliath. Even though the IRS guy has governmental powers, but you can't just do anything. Also, and hopefully people who go to work for the government, remember that there's rules, and just because you're the government, you can't just start exercising that governmental power just because you feel like it. It's the emotional need to win or do whatever it is you have to do. So just keep those things in mind. But anyway, the effectiveness of these guys takes some time. The Treasury Department's career staff estimates that more than half the $700 billion it would come from changes in how business and individual incomes are reported to the government. And here's this, I said this in class, and here's the scary thing. Look at this little part that I outlined here. It says banks and other payment providers will be required to tell the IRS how much money came into and out of individuals and business accounts every year. That's scary. That's scary. I'll say it again. That's scary. I'll say it again. So I'm saying right now we have a year-end number that we tell IRS. If the IRS is looking over your shoulder at every single thing you do, what are we doing then? And let me tell you something. The technical capability to do this would be more powerful than every computer system that we have today. So to sit there and say, okay, well, we want, now if you're just making people report it, that's one thing. But if you're surveilling it electronically, that system is not in place, and I don't predict that system will be in place for quite some time, maybe your lifetimes. But if you're if you're relying on people just to report it to you, you're in the same boat you're in now. But that's scary. That's scary to me. So going far beyond the way far beyond the existing reporting of interest income. The changes wouldn't require individuals to file any additional forms, but it wouldn't provide the IRS with direct information about what someone's tax liability should be, though. Yeah, okay. So in other words, you're not self-reporting your tax liability from that activity, but okay. So business owners are trying to hide the income, could still attempt to use cash. Yeah, cash. And the crypto thing, about a couple of years ago, somebody made me sort of look into it. MIT had the guy running the SEC taught the cryptocurrency course at MIT a couple of years ago. And I attended the course. I did the online version of that course. And, he makes a convincing case. The guy, he worked at Goldman Sachs for a lot of years, politically connected to the Democratic Party. But, he makes a compelling case for it. But just the reality of it is, like I just said with this part of it, being able to monitor, really, that this is a cryptocurrency activity, monitoring every dollar in and out and every check and every payment and everything that's going on. I know that infrastructure is we're not remotely close to it. And you would have to stop the world from doing anything and, rebuild all the computer systems. Folks, let me tell you something. Now, it was a pretty big ramp, but the folks who come from Belleville, that Route 7 that turns into 1 and 9, I kid you not, it's 7 years, and it's finally finished, but 7 years of being in traffic and that light and watching the construction of that. That's an on-ramp. It's concrete steel. It's an on-ramp, but it's still just an on-ramp. It's not a whole new financial system. And that's what this is. 7 years that took to put that together. So anyhow, but the information reporting rules will give the IRS much more information as it decides who it wants to audit. It also create an enormous flow of information that the IRS would have to learn how to manage and use. So, and here's what's going to happen though. Like the woman who works for me, people are going to go to work for the IRS for maybe some number of years, learn about all this, and then maybe leave. And what are they never going to talk? I mean, you could say, oh, well, you signed something not to talk about it. Well, I mean, it's people are going to talk about it. And then very wealthy people are going to pay some, say, hey, give us a seminar on what the IRS is doing, and it's just like, I hate to say it's just almost like espionage, where you're trying to learn what the British are doing or what the Russians are doing or whoever. So, 30 billion of the funding boost would pay for technology upgrades, which is very small capital expenditure, which makes sure the IRS could obtain and analyze the bank information the people said. So when the government has independent information, such as W-2 forms, compliance rates are nearly 100%, but it doesn't have such information. Estimated compliance rates are often about half that level. So yeah, so if you're relying on people to report it, and again, as I said, if you've got documentation and contracts and agreements, and then your cash flow matches that, that's sort of what you want. The proposals are expected to be included in the roughly 1.8 trillion anti-poverty plan. Okay, that's something else. Biden detailed in a speech to Congress. This was not the thing the other night. Okay, this was a year ago. This is in April when Biden just got into office. It wasn't that thing in Philadelphia they did, whatever that was. So anyhow, the anti-poverty plan is like to include proposals to raise capital gains taxes, change how unrealized gains are taxed at death and as income, unlikely to include a change in the estate tax, which applies to the total net worth of wealthy people who pass away. Yeah, and again, look, there's a lot of money behind the Republicans. There's a lot of money behind the Democrats. Both parties have, I don't want to say fringe groups, but they have people who are just very vocal about things. And, those, both the right and the left, the 5 or 10% on the edges, they're noisy, and I guess the old timers like it that they make a lot of noise, so it doesn't make them, it doesn't make Mitch McConnell get out there and say this or Schumer say whatever. But I heard some outrageous stuff that Schumer was supporting Trump now or something. I don't know if that's, if I heard that right, or he was supporting some of the Make America Great Again folks or something. I don't know if that really could be, but I got to look into it to see if I misheard something. The idea of collecting more money the government is already owed is appealing to both parties because it doesn't require tax increases and could dampen economic growth. Yeah, again, we care. Economic growth is how all the activity expands and more people work, and that's economic growth. Because it's easier to sell such policies to the public as getting money from people who should have been paying all along. Business individuals who face more intense audits have a long history of complaining to their representatives when the enforcement ramps up. And that's our form of government. I mean, you can go find your senator or find your whoever and say, hey, this is making me unhappy. And you buy a dish at their dinner and whatever, and you get some accommodation. So it says Democrats have been building political support for significant IRS expansion. Welcome the proposal. And there's some other people here. I don't even know. This is the Oregon guy. And he says, I'm proud to be working with Biden to ensure the IRS is fine to ensure the wealthiest pay their fair share. That's a very left. That's not a big surprise that comes from Oregon. Someone saying that. Before Congress considers this proposal, it should make sure the IRS has appropriate oversight, so there's safeguards as law enforcement expands. Okay, so yeah, you don't want to misuse governmental power, which unfortunately happens a little bit too often. No one has properly assessed the risk of this proposal, thinking that it has some magical pot of gold, the rainbow. And he says they're not ready for it. The taxpayer rights protection structure is not ready for it. They have not adequately thought through how and where this money can be spent. Okay, so this is the National Taxpayers Union, a conservative-leaning taxpayer rights group. So yeah, this guy's making a dour prediction, saying, "Oh, how are you spending this? And you're not ready for the enforcement. You're ready. All pieces aren't ready to deal with it. All this uncollected federal income tax." The New York Times reported some of the details of the plan. It says this plan is excellent. It's comprehensive on both the funding side and on the information reporting side. Director for Federal Tax Policy at Center for Budget and Policy Priorities, which advocates for spending much more money on IRS enforcement. The IRS has been shrinking for the past decade through a series of budget cuts, and says Democrats have united around trying to reverse the trend. The agency's the agency has a $12 billion budget now, right? And then we're going to add another 80, right? So whatever that is, 6 times, 6-7 times, but again, over a decade. So, but still, you're almost doubling it, even dividing 8, whatever that was, dividing what was it, 80 billion? Yeah. Dividing 80 billion by 10, you're going from just nominally looking at a $12 billion budget to making it a $20 billion a year budget. All right. It says despite inflation, population growth, increased responsibilities, the budget's pretty much the same number that it was when Obama was in. So Republicans have been less interested in major expansions and generally aren't banking further cuts. And audit rates, this question came up in class. And someone had said to me, "Oh, well, what's the percentage of people who are audited?" And I said 10%, and the answer was about 0.5%. But let me justify that why I said that 10%. That 10% was people making over $1 million. That's what I was thinking of. That's the 10% I was thinking of. I knew it was 10%, but it's 0.5% if you just include everybody. So it's an audit rates of and we're going to go through what an audit is. We'll discuss that. So, and then the accepted principles of that and all that. And it says audit rates have hit 40-year lows. And it says the agency has 15% fewer employees. Yeah, so that's 15% is 1 out of 7 almost, right? It's almost about 1 out of 7. So it has 15% fewer employees than it did in 2010. It devotes 30% less funding and staff to enforce than it did. So that's a lot. I mean, you have instead of 3 guys going out to do enforcement, you have 2 guys. So let's talk to Belleville about having 7 cops on the road versus 5, something like that, right? That's a big change. The virus pandemic disrupted the global economy, affected the taxes. Yeah, whatever. So yeah, actually, this was we discussed it in class. It says the agency estimates that for tax years 2011 to 2013, there's $381 billion annually in legally owed taxes that went uncollected. This is known as the tax gap. There's your we were discussing that before. That's your tax gap. Okay, there's your tax gap. All right, what's owed but not collected. After inflation and budget cuts, the number is likely much higher. And the current commissioner thinks it could be $1 trillion a year, and not just a couple $100 billion. And but again, you're making estimates. These are all estimates. Nonpartisan analysts project the additional money for the rest would pay more than pay for itself. The risks that they screwed up in the execution, the risk that the administration change priorities. Former IRS commissioner who has been advocating for more funding, all of those things can happen, but the good things can happen too. And if you don't take a shot at it, it's never going to happen. The goal is for focus on enforcement on the highest. That's a comfortable thing to say, but how many people really make millions of dollars a year? That's not a lot of people. It's not a lot of people at all. It's a focus on enforcement on the highest income Americans. People familiar with it said, although adding the audit rate for household with actual income under 400 would remain similar to what it's been in recent years, the plan doesn't set target audit rates for higher income households, giving the IRS flexibility to decide where to focus its attention. So the administration's proposal for multi-year funding will be welcome at the agency, where the officials emphasize that they need to get consistent funding. It can take years to hire and train skilled. I said this before, and then years after that for the efforts to yield money. So you're looking about half a decade. So by that time, next president or whatever it might be, next administration, all right. So, and then battling higher income taxpayers. You're fighting someone who has a lot of money, sophistication, experience. They might know a lot about tax. They might even know more than the IRS guy knows. And I've seen it. So, and the certainty of multi-year funding can let the agency plan better and make the plan doable. And again, going back to the tax gaps, is enforcement alone will not narrow the tax gap, and efforts necessary to raise compliance levels are resource intensive for the IRS and can be intrusive to taxpayers. And it says we're committed to working with our partners to carefully balance the needs with the needs. I like this last part of it, the needs with the burden, right? And you're balancing that. Okay, folks. So we did a couple things today. I'm just again, every time I repeat myself with all this stuff, every time I repeat myself, I feel like there's something else to highlight or something else to focus on. So we did a couple things here. We did 3 sets of notes. We did the single, and we'll do the next one. We'll do for 2022. We'll just do so. So we'll include those as we go along. But like I said, you guys have all that stuff sort of posted already to Blackboard. So you guys have that. All right. So again, hopefully this was some time well spent. It was a good hour or so, maybe an hour and 10 minutes, something like that. And we'll see you during the week.